Hey everyone, welcome back to the channel. If you are new here, please hit subscribe and tap like so you do not miss my breakdowns of tech stocks changing the game. Today, we are going to talk about Unity Software, ticker U. Unity is a company with a lot of potential, but also heavy challenges. I want to explain what Unity does, what recent results show, what could go right, what could go wrong, and what to watch if you are considering it. Nothing here is financial advice, just information. Unity provides a platform used to create and grow games and interactive experiences. Its tools are used on mobile, PC, consoles, and extended reality devices. The company supports developers along the whole life cycle: creating, prototyping, building, monetizing, advertising networks, and live operations. Unity sells Create solutions, which include game engine subscriptions and authoring tools. It also sells Grow solutions, which include monetization, ads, user acquisition, and ad network infrastructure. Unity has been pushing beyond pure game creation tools into enterprise, AI, XR, and real-time 3D use cases. Customers include game developers, studios, and companies using 3D and AR/VR for non-gaming applications such as architecture, automotive, film, and simulations. Unity reported second quarter 2025 financial results with revenue of about $441 million for the quarter ended June 30, 2025. That is slightly down year over year compared to $449 million in the same quarter of 2024. Revenue trailing 12 months is around $1.78 billion, down about 13% from the same period last year. Create Solutions revenue was $154 million versus $151 million year over year, showing slight growth. Grow Solutions was $287 million down versus the prior year. Unity beat expectations on adjusted EBITDA, and free cash flow was positive at about $127 million. Net loss was about $107 million with a margin of negative 24%. Cash and cash equivalents and restricted cash at quarter end were about $1.7 billion, which gives them some runway. These numbers show a mixed picture. Some parts holding up, others declining. Heavy costs, but also positive cash flow. Unity's new AI platform called Unity Vector and a 15% sequential growth in Unity ad network in Q2 are seen as bullish signs. At the same time, Unity faces competition and threats. Meta revealed its own runtime engine for app development, reducing reliance on Unity in some workflows. That move hit Unity's stock in pre-market. Heavy insider selling has also been reported. Some insiders, including board members, have sold millions of dollars worth of Unity shares recently with no offsetting insider buying. That can signal that people closest to the company may see current valuations as stretched or expect challenges ahead. What are the possible upsides if things work out? If Unity continues to grow the ad network and Vector, expands its enterprise and non-gaming verticals, improves monetization and operating leverage, then free cash flow could scale meaningfully. The fact they are generating positive free cash flow in some segments already is a good sign. Their large cash reserve gives them a buffer to invest in research, product innovation, and to survive downturns. If Unity wins large customers outside gaming, gets more enterprise contracts and recurring subscription revenue from non-games 3D experiences that could diversify risk. Cost discipline and margin improvements also matter. Unity is seen as a platform central to how games and interactive content will be built in the future. XR, AR/VR, real-time 3D, and AI in content generation are trends that could benefit Unity. Licensing or strategic partnerships with automotive, architecture, industrial simulations, XR/VR, or AI tools could give non-cyclical revenue. If the Unity editor remains popular, Create stabilizes or grows, and they stop leaking revenue through inefficient segments, that helps. But there are significant risks. Unity is still not turning a GAAP profit. Losses are large and margin is negative. Even though free cash flow may be positive, overall profitability remains far off. If costs rise, cash burn could increase. Revenue decline in some segments is a red flag. Grow Solutions declined year over year, and Create Solutions only had slight growth. If game engine license revenue, subscription revenue, or developer sentiment weakens, that can hurt revenue trends. Competitive threats are real. Meta building its own runtime engine is an example. Also competition from Unreal Engine, open source engines, and new entrants. If developers see cost uncertainty, licensing issues, or runtime problems, they might switch. Unity had a controversy before about its runtime fee policy, which caused backlash. Even though that was rolled back, trust and brand reputation matter among developers. Valuation risk is high. Analysts' targets are mixed. The stock may already price in hope of future growth. If growth does not come, or results are below expectations, sharp sell-offs could occur. Insider selling could impact investor sentiment. Dependence on developer ecosystem is critical. Unity's platforms are only as strong as the developer community. Tech transitions in XR, real-time graphics, and generative content are demanding and high risk in execution. What I would personally watch. Revenue trends in Grow versus Create segments. Are they stabilizing, growing, or continuing to decline? Free cash flow and adjusted EBITDA. Is margin improving or staying stable? Insider activity. Buying or selling. Big insider selling without offsetting insider buying is a warning. How Unity handles competitive moves like Meta's runtime engine announcement. New customer wins, especially outside gaming. Cost control. How well Unity keeps research and infrastructure costs in check. Product innovation cadence. AI tools, real-time 3D, XR, and generative content. Developer satisfaction and retention. Whether developers are sticking with Unity and choosing it over alternatives. Macro environment, regulation, AI momentum, interest rates, and tech valuations. My view is that Unity is a high-risk, high-potential name. It is not a safe play, but for those who believe in the future of real-time 3D, AI, and XR, and believe platforms that enable those will be essential, Unity could be one of the big winners. But I would only put a small portion of capital in this and expect volatility, delays, and possible execution issues. It may be a multi-year hold. I would want to see consistent revenue growth, margin improvement, and proof of enterprise adoption before being too confident. Wrapping up. Unity software is a mixed bag. It has strong fundamentals in some areas, large cash reserves, positive free cash flow in some quarters, product innovation, and platform strength. But also real weaknesses, decline in revenue in key segments, large losses, competition, possible challenges in trust from developers, and pressure from new entrants. If you liked this breakdown, please hit like, subscribe, and comment what you think. Will Unity find its revenue inflection, or is the stock priced for perfection? Thanks for watching. Stay informed, stay patient, and always do your own research. I am not a financial advisor, and nothing in this video is a recommendation to buy or sell any security.